through, and at the end, everybody get excited. You know, this is a celebration. Where's everybody moving to? If you guys will use the chat and let me know where you guys are wanting to move to. Also, does anyone know the minimum down payment for a loan? If you want to put it in the chat. Still have a couple minutes. Can everybody hear me and see me okay? $3.5 to 5%. That's exactly right. You want to talk for a second, Blake? This is my senior loan officer, Blake.
Yes, that's actually pretty spot on. 3.5% is for the FHAs, which we'll get into here in a little bit, and 5% is for the conventional. So yeah, absolutely. Good job on that one.
Yep. All righty. Still got a couple minutes. You guys, where are you guys moving to? Do I have a lot of Collin County people? Dallas area? Be sure to click on the chat icon and ask us anything. We'll answer questions halfway through and at the end. You guys, I want to thank you guys for coming. Make sure to schedule a one-on-one call with either my senior loan officer, Blake, or myself. I put the link in the chat, toddpoorrealty.com/book, and we can book a one-on-one call for my loan officer, for me, or for credit repair. And yeah, be sure to use the chat. Grab a pen and paper and take some notes. Remember to utilize, ask us questions anytime. And we'll answer them here in a bit. Maybe one more minute. We'll wait for some people to come on. We have Barbie that joined. Jaleisha B. Thank you guys for coming. We're just going to wait a few more seconds and let a few more people come on. Abisola's iPhone, she said 3.5% is the minimum down payment, and that's correct. You can purchase a house with only a 3.5% down payment, and you can get down payment assistance with that. We'll cover that in just a minute. Make sure to take some notes. This will be recorded, so I'll post this to YouTube here in a bit afterwards. And be sure to use the chat. Let me know where you're moving to. I would like to know. And let's see, ask us any questions in the chat. All righty. Oh, this is how you would book a call right here. As you take the first steps on this journey, focus on the excitement you feel. Homeownership changes lives. It's that simple. It gives you more stability, more stake in the community, and a greater sense of pride and accomplishment. But don't worry, no one expects you to know everything about the process up front. Instead, focus on your home buying goal and how achieving it will change your life. Let the experts help you along the way with the finer details. Your job is to think about what you want, what you need, and who's going to help you achieve your goal. Build your knowledge in your team when it comes to buying your first home, seeking out information about home ownership and the home buying process. That's the first step. Yeah, finding information, finding a good team to work with, you know, a realtor and a lender and everyone like that, and checking your credit. Make sure your credit's in good shape. Before you can make one of the biggest and most impactful purchases of your life, you need to understand what it takes to become a homeowner and why homeownership is so worthwhile. That's where the experts come in. In this guide, you'll find expert insights and research to help you learn how to get started, what you need to know, and what you can expect from the process. That way you'll have confidence as you take this important step forward. And I'll introduce my all-star loan officer in just a minute. Please click on the chat icon and ask us anything. So you're moving to Plano, Richardson, or Allen, moving to Dallas. That's good. Awesome. Yeah, we cover all those areas. We've been in Collin County and Dallas and Princeton and all those areas, Frisco a lot lately, but we cover all the areas. Book a one-on-one call. I put the link in the chat so we can build the roadmap to getting you into a home smoothly while saving lots of money. This is most likely the biggest investment you guys will ever make. It's a great opportunity to build generational wealth for your family and for the future of your family. Are you concerned, stressed out, intimidated, anxious, and uncertain? As a first-time homebuyer, guess what? You'll feel a lot of emotions. You may be asking, will I get approved? Am I going to be able to afford my dream home like the one you played with as a kid with Ken and Barbie? You may be stressed out. Maybe you didn't get the first house you wanted, or it's been a month and you still haven't found the perfect house. You may feel intimidated like David and Goliath in this crazy market, which is now turning from a seller's market to a buyer's market. Buyer's market means there are more buyers than sellers, which makes it easier to buy. You may be anxious and uncertain. You may have to wait 3 or more days to see if your offer was accepted. Should I even get stressed in these situations? And I would like to quickly introduce my team. I'm Todd Poor with TD Realty. I've been in the real estate business for around 15 years now. I'm a first-time homebuyer specialist. I do have a background in building homes. I also started a tiny home business in Midland for the oil field and employed only addicts, alcoholics, and people with felonies, mainly out of rehab. I am over 6 years sober from alcohol. I'm getting my first triplex this year and turning it into sober living. And I chose to work with first-time homebuyers because I do have a love and passion for helping people and making people happy. I do understand this is an extremely vulnerable situation that you're in. You're in good hands. I really care. I really do. Me and Blake do. Johnny's my trusted title guy. We work together on the financial transaction side. Tanika Donnell is an incredible woman. She started this brokerage. I don't know how she keeps up with everything she does, but she's basically a genius. And she does have an awesome charity called TDR Cares. Nicole is my transaction coordinator that keeps my contracts in perfect order so I can't make mistakes. Not a whole lot of agents have one of these. And then there's my expert loan officer that goes above and beyond for my buyers and myself. He's saved a lot of deals for me. I don't get paid a dime, for you using him. I want the best deal for you. He can usually beat everyone's rates. He compares around 10 different banks. And you don't pay me a dime for me helping you in a real estate transaction. Buying new construction, you don't pay me anything. The seller pays me. Here are some client reviews. I'll go through these quickly. Yeah, be sure to ask questions in the chat. Book a one-on-one phone call at toddpoorrealty.com/book. We'll get into the loan process, everything soon. As you can see, I never pressure clients into anything. It's definitely cost me a lot in the long run, when talking to my clients out of buying a home with certain defects. And then sometimes they don't end up buying anything after that. It's cost me a lot of money, but I'm all about people buying and being happy at the end. I do a pre-inspection. We look at a home and record a video of the home with all of its defects. Here's Kristen. She used Blake and myself as well. We all became very good friends, most likely for a lifetime. She and her husband put reviews everywhere. They cooked me dinner a month ago, and we take turns sending each other gifts. We got a 2,200 square foot, 3-bed, 2-bath, new construction home for $305,000. Book a one-on-one consultation, a quick 15-minute phone call. Use the chat, talk to Blake to get a pre-approval to buy a home. I can't emphasize how important it is to be pre-approved for a loan when you before you consider going out and buying. Getting pre-approved for a mortgage is truly the first step that you should take if you're serious about buying a home. First-time homebuyers, however, are often intimidated by the amount of work that it can take to get approved and end up shuffling this important step to the end of their to-do list. We lose so many homebuyers because they can't get their paperwork together. They don't even start it. Some think it's just too early to get started about it. It's definitely a huge costly mistake. And Blake, my loan officer, I can't stop thinking about you. So you want to take over?
Absolutely. Thank you very much for your kind words. I do appreciate that. It is true. Todd does care. He does go above and beyond for all of his buyers. And it's true that, the first step is booking that call with us. We need to see what your goals are and what works best for you. And that moves us on to the pre-approval. I will ask you to fill out a loan application, a bunch of documents, and we'll get all that going. And during that process, I am going to look into the first-time homebuyer qualification for you. The state wants to give you money, so let's use it. Let's use it towards that down payment, maybe some closing costs. And then once you're pre-approved and we've got that first-time homebuyer assistance working for you, you and Todd get to go out and shop homes. You get to go walk through all the homes, find out what you like, what you don't like, what area you like, what area you don't like, and really hone it into the one that you love. And you find that home that you love and you're ready to buy, then you submit an offer and Todd will negotiate those terms with you. So once the offer is accepted and terms are negotiated and everybody's happy with it, you go under contract, and that's when it really gets fun. So at that point in time, Todd will send the contract to me. We'll structure the loan. I will give you some disclosures and all that fun stuff. And this is all part of the finalizing the financing. We get down to the nitty gritty and we hammer out the loan. Usually takes about 21 to 30 days. So during that time, we have inspections and appraisals and all sorts of fun stuff. We'll be with you side by side the whole way. Todd and I will. Once we finalize that financing, you close on the home, sign a bunch of papers, and then you get to move in, and then you get to enjoy your life after making a great investment. Mistake number 1, ignoring the first-time home buyer incentive programs. Well, what are the first-time homebuyer grants? Well, they are specific to your region, and that means your county. It is dependent on the area median income, the AMI, and that will depend on the income. So they put income limits per county based on the AMI, and the grants come in 2 forms: a forgivable second mortgage, which means the state gives you money. Let's say they give you $5,000. Well, you have to live in the home for 3 years, and then that $5,000 is forgiven. If you move or refinance within those first 3 years, then you have to pay that money back. And then It's also a grant, and they are both down payment assistance. So how do the first time home buyer programs work? Well, Freddie Mac and Fannie Mae, we use the forgivable second with those a lot. They go really well with them, and they've got a Home Ready and Home Possible that we use, and then the FHA, we use the grants. I use T-Shack with that. It works great. So here's an example. Anita wants to buy a home. It has a purchase price of a new home is $300,000. The minimum down payment is 3.5%, which is $10,500. Now, I got it approved on an FHA, so there's an upfront mortgage insurance cost of 1.75%. Now, that brings our total loan amount to $294,566. So the incentive is 5% of the total loan amount. Now, that gets Anita $14,728, which is great. The total down payment is now covered by the incentive with $4,228 left for closing costs. So now that could be escrows, that could be title fees, that could be origination, that could be all sorts of things. That could go towards buying. Well, you can't buy her down the rate with that, but anything else would be great for that.
Hey, Blake, did you say that FHA upfront mortgage insurance cost, it's 1.75%? Did you say you can roll that into the loan so it's not like cash out of your pocket kind of?
Oh, yeah. Great question. Absolutely. You can roll that into the loan. Absolutely. Now, that is the only closing cost on a purchase that you can roll into it. Refinances are a little bit different, but on a purchase, that is the only closing cost you can roll into it.
Okay. Yeah. So we did have an FHA 3.5% example from 3 days ago. So the house was $210,000, and we knew we could offer. Sorry, someone's microphone on. We knew we could offer probably 200 or 190 because it'd been on the market for a long time. So we ended up offering $10,000, no, $20,000 less. But what we did was we offered $10,000 less and then asked them to give us $10,000 in seller's concessions. So with that extra $10,000 that is part of the loan, she paid for pretty much all of her closing costs, which was, I think, $15,000. So then she had $5,000, and then the down payment assistance. I don't think she's paying anything, is she, Blake, for her?
No, actually, I'm working. The way this specific deal is working is she's actually getting money back at closing. That's the way it's structured now. We do have a little bit of ways to go. So the goal is to have her not pay anything at closing and get her some back if I can. Yeah, that's definitely it. If we can, I should say, because you negotiated that 10,000 in seller concessions, which is awesome.
Yeah.
By the way,
thanks. So if we have extra, we can also buy down the interest rate. Like we can buy down the interest rate 2% for the first year and 1% for the second year. So your payments will be lower, your interest rate's lower. There's a lot of cool strings we can pull on all this.
All right, types of mortgages. Well, number one is the conventional loan. Now, who has heard of Fannie Mae and Freddie Mac? Anybody? I know you have, Todd. Well, Fannie Mae and Freddie Mac are the government-backed entities that set the guidelines for conventional loans. They say, all right, conventional loans have to fit in this box, and we can call it a conventional. These are the guidelines. So that's Fannie Mae and Freddie Mac. Now, FHA is a government insured loan. It's the Federal Housing Administration, and the government says, okay, if this loan defaults, we will pick up the slack. We will insure this. We will insure the lender or the servicer, whoever holds that debt, should this loan go into default. Number 3 is a USDA loan, which is another government insured loan. Same thing with the FHA, but this one is area specific. Now you have to purchase in a rural area for this. And when you're looking at homes, Todd and I, we've got a map. We'll check and see if you are buying in a rural area. We'll double check, and I'll look into this if we can. Reason being, it's a 0 down payment loan. There are income guidelines, and there are that are area specific, just like the down payment assistance grants. But this is a really great loan. I've done a few of these. They're great. And number 4 is the best deal out there. Really, it's our VA, and it's only for qualified veterans and active duty military. Do we have any veterans with us? No? Well, this is a great deal for all the veterans, and they deserve it. So keep in mind, these loans and the loan requirements may vary slightly from lender to lender, but generally we all kind of ask for the same thing. All right, loan documents. This is a part of the pre-qualification after you fill out the loan application. First, we're going to ask for a driver's license and identification card and social security card. We want to know who you are, and we want to know that you are who you say you are. We do need residential address or addresses for the past 2 years. We need to know where you live. Then there's income verification, which would be name and address of your employer for the past 2 years. So we need to make sure that you've held a job for 2 years. Doesn't have to be the same job, but we want to make sure it's a stable work history. We will ask for 2 months of pay stubs and bank statements for checking or savings. That is to verify the income. Bank statements are to make sure that you have enough for down payment and such. And we will ask for W-2s or copies of your most recent tax return. The tax returns generally are reserved for self-employed. And also with self-employed, we will probably ask for profit and loss statements for the past 2 years. Now, if there is any additional income like child support payments, social security benefits, retirement, anything like that, go ahead and let us know on that. We might use that to help you, to help boost your purchase power. It definitely helps. And any list of assets that you feel may help, like a car, a boat, especially if you have another, home that you're getting income. Yeah, those are all the loan documents. Now, the Federal Housing Administration loan. FHA loan provides mortgage insurance on loans made by FHA approved lenders throughout the USA. Again, government-backed loan. Great program. Now, the benefits of an FHA loan. Well, it's a low 3.5% down payment with a 580 score, and a credit score as low as 500 with 10% down. Now, keep in mind, these are rock bottom scores, okay? So with that, your interest rates aren't going to be the best interest rates. What we want you to do is get your score to 640. That is where the loans really become affordable and you start getting good rates, is at 640 and above. Granted, we'd love everybody to have a 780, but life happens. We don't all have credit scores above 700. So if we're looking at a 500, 580, we do have a credit repair specialist that can help you out. with that. And Todd and I can look at your credit and kind of guide you in the right direction as well. But again, those are rock bottom scores. Now with FHA loans, it is easy refinancing with the FHA Streamline. They do have the lowest mortgage rates. The higher DTI ratios are accepted. Who knows what DTI is? Well, DTI is debt to income ratio. And debt to income ratio is your monthly payments, your car payment, your student loans, your any sort of debt you have, credit cards, mortgages if you already have it. And then we divide that by your monthly income and it gives us a ratio. So FHA does have the higher DTI. You could choose between a 15-year or 30-year fixed rate or adjustable rate term. Now we aren't in adjustable rate market right now, so I don't really look into those. Rates have actually started coming down, so I don't think we're going to be in that ARM market anytime soon. Now down payment assistance programs, like we stated earlier, and grants are accepted with FHAs. And Todd was talking about the seller concessions. Well, with the FHA, we can have up to 6% seller concession. So if you're buying a property at $200,000, Todd can negotiate you up to $12,000 worth of seller concessions.
Hey, everybody, I just wanted to remind you to click on the chat icon, ask us any questions. We'll answer anything you want to know. And yeah, if you guys want to book a call, we can guide you through the process.
Yes. Conventional loans. A conventional loan is a home buyer's loan that is not offered or secured by a government entity. It is available through or guaranteed by a private lender, like me, or the two government-sponsored enterprises, Fannie Mae and Freddie Mac. All right, FHA versus conventional. Minimum down payment for an FHA is 3.5%, and for a conventional is 3%. Minimum, so those are really low down payments. Minimum credit score on an FHA is 580 and 620 on a conventional. And again, these are rock bottom scores. At 640, loans become very affordable. Maximum DTI, that's that debt to income that we talked about, is 55% for FHA and 46% for conventional. Now, the loan limit for 2022 on an FHA was $420,680, and on a conventional was $647,200. Now, those have gone up actually as of 2 weeks ago. They went up. FHA is at 472 and conventional is at 713. So a little bit more room to work there. Anything above that is considered a jumbo, and we have different guidelines for that. Now, income limits. So the Federal Housing Administration and Fannie Mae and Freddie Mac don't put limits on how much you can earn to qualify for the loans. Of course, in their eyes, the more you make, the better qualified you are to pay back the loan, right? Well, these income limits are from Dallas County, and they are with the down payment assistance program. I pulled these right off of the TSHAC, the Texas State Affordable Housing Commission, pulled it right off of their website. So in Dallas County, the income limit with the down payment assistance for FHA is $97,400, and for conventional with DPA, it's $76,480. Now that's a 2-person home, and that does go up if there are 3 and 4 people. So minimum out-of-pocket contribution on an FHA is 3.5%, and conventional it is 3%. Now that can be gift funds from a family member, that can be grants, that can be the first forgivable second mortgage. So we're talking about down payments and closing costs. Down payment plus closing costs equals cash to close. So when you hear me say cash to close, or you hear someone say cash to close, that is what you're bringing to the table at closing. So this is what you can and can't use for your down payment and closing costs. Well, number one, checking and savings. This is what what almost everybody has. Everybody almost has a checking and savings, and we need to know which account that you're going to use for your earnest money, your option money, and cash to close. We will need financial statements on them. Again, 2 months worth of bank statements. We can use a 401k and retirement accounts. Now, these do come with terms of withdrawal. So we will need to see the money in there, and then the money being transferred over to title for that. Gift funds from family members. Financial statements will be required from them as well. We need to see where the money's coming from and where it's going to. Stock, bonds, or cash, and then we do need, again, financial statements with them. Now, when it says cash, that's not cold hard cash. You can't, fill up a duffel bag and show up to closing with $10,000 and plop it on the table and say, "Hey, here's what I want," or here's my down payment. It needs to be documented. We need to know where the cash is coming from, and that's I've said it a couple times now, and I feel like I should explain it. It comes from the Patriot Act. So with that, what they were doing with the Patriot Act is they want to make sure people aren't embezzling funds or laundering funds, laundering money in real estate. So when we say cash, it's got to be a cashier's check, because we can document that right out of your account. Now, it cannot be money orders. You can't go to a Western Union with that duffel bag and say, "Hey, give me $10,000 of money orders," because we can't document it that way. So things you cannot use: can't use another loan, can't go down to the local credit union, get that $10,000 in a loan and have it wired over. You can't use a credit card, and then undocumented cash. Like I said, we need to know where everything's coming from. All right. Buyer's eligibility based off underwriter review. Your ability to repay the loan, employment verification, total income, monthly debts, proposed monthly payment, and that all factors into the DTI. There's those ratios we talked about. Number two, your willingness to repay the loan. We're going to look at your credit report, and that has a payment history of your previous loans, your rent, your bills, etc. And then, what is the property being used for? Is it your primary property? Is it a secondary property? Is it a vacation home? Is it are you buying a home next to the college your kids are going to? Are you moving mom and dad next door? All these are factored into your willingness to repay the loan. So you're more willing to pay your loan on a home that you're moving into because you need a place to live, other than a vacation home. And then three is the collateral. Is the property eligible for the loan? We do order the appraisal after we get all those disclosures signed, and that will determine the value of the home. And is it worth the agreed upon price? And if not, we can address that. Maybe it's more, maybe it's less. Now, Q&A. I saw a couple questions pop up.
Yeah, I mean, this is the first time. I mean, we haven't had many questions at all, really. You guys want to click on the chat, ask us questions. We're just going to answer them really quick and continue on. What happened if I buy? Oh, sorry. Go ahead.
So I got a direct question from Richa. Please explain a DSCR loan. Okay, I'm going to do that real quick. That stands for debt service credit ratio. And what that does, it takes the proposed rental from the investment property and qualifies the property to have a mortgage instead of using your personal income. Now, there's a lot more that goes into that. So book that call. More than happy to go into detail about that. What happened if I buy for rental purpose? So for investment properties, There are a couple of different ways to get those. One is house hacking. One is just buying it as an investment property. Investment properties, you do have to put 20% down payment. So keep that in mind for everybody that wants to invest. House hacking, put very simply, is you buy a home, live there for a year. Next year, you buy another home, you rent out the first home. You live in that second one a year, you move out, buy another one, rent that one out, and so on and so forth. That's how you get around putting the 20% down. Each year, you buy a primary home, and then you just leave a trail of rental homes behind you. What does roll into mean? That was said being, oh, great question. Great question. So when we say roll into, like the upfront mortgage insurance, what we're doing is we're taking the 1.75% on upfront mortgage insurance cost, and we're putting it right on top of the loan. So you don't have to pay it in the closing costs. Okay. That's paid out through the life of the loan. So we're just rolling it into the loan, just making it one bigger lump sum. Now, keep in mind, that is the only closing cost on a purchase that we can roll into. On a refinance, depending on the situation, because every loan is different, depending on the situation, we can roll all the closing costs into the loan. So that being said, on a refinance, if it's just like a rate term refinance, then there's no closing costs. We do our best to roll it all in. Sometimes we can't get all of them in there, but we try to make it to where you don't come out of pocket anything. Or if it's a cash out, it just, instead of getting the big cash out, we take the closing costs out of that. So, but great questions. Any more?
Yeah, so on the rental, I do work with a lot of investors that buy rental properties. I'm good at, even if it's your first time home buyer or you're an investor, I'm good at picking areas that are going to inflate and be worth a lot more in the future and good rent. And then I can also rent it out really quickly if you guys need help with that. But I guess we're going to move on. Remember
Let's move on. Oh,
that all depends. Better to move out to the country than any inner city. It all depends on what you're looking for. If you need a USDA loan, then you would move to the country. But book a call and we'll talk about where you should move to, and I'll help you with that.
Yes, I have. Yes, that's so. Have you ever heard of a first-time home buyer taking over a loan from the seller, especially if the seller has a low APR of the loan left? So yes, that's called an assumable loan. And if you're looking into that, if you have a specific situation that you're looking into, read the fine print on the loan agreement, because sometimes there's a due on purchase clause, and which falls under the assumable loan. So due on purchase means if you assume a loan and there is a due on purchase or due on transfer, then you're liable. You could be held liable by the servicer to pay that full loan amount right there. So be careful with that. If that's something you're looking into, give me a call. Let's chat a little bit more about that. More than happy to look at the loan for you on that. Make sure that's a good deal for you. Absolutely. And again, like Todd said, moving out to the country, that's more the USDA than the inner city. It depends on really what lifestyle you want and where your job is and where you want your kids to go to school. We'll move you wherever you want, so that's what's great about Todd and I. We're statewide. So, all right, let's move on. Mistake number 2, not getting pre-approved. Oh my gosh, that's a big one. So pillars of mortgage approval is credit, income, and down payment. So loan pre-qualification. Pre-qualification helps you determine how much you can afford to spend on a home based on 3 factors. Your credit. your credit score, what your credit report says, and total debts. So banks look at your credit score as it's a numerical value of how much of a risk it is to lend money to you. So the lower the score, the higher the risk. The higher the score, the lower the risk. So when you're looking at your credit score and thinking about working on your credit, keep that in mind. So less of a risk, lower interest rates. Number two, your income, employment history, and income calculation. So again, we do need 2 years worth of employment history. Now, during the shutdown, we all had reasons why we weren't working, so we can work around that. And then, little things here and there, we can work on explaining that. And then I will calculate your income for you to make sure you get the most out of it. Number three, your assets, money used on your down payment and closing costs. So those bank statements that we needed, and we went through that list of what you can and can't use. So pre-qualification can help you determine what house you qualify for. You don't want to go get under contract and put earnest money down on a $500,000 home and then find out you're only qualified for 435, because if you go past that option period, now you're losing earnest money, and we don't want you to do that. So let's get you pre-qualified, make sure you're looking in the right spot. Then it can increase your bargaining power when negotiating with a seller. Once we have you pre-qualified, I'll call you. We'll do a quick loan consultation. I'll break down the loan for you and tell you what you're qualified for. And then I'm going to give Todd a call, say, hey, we got them approved for 450,000 on this type of loan. Go get them. And I'm going to give him what we call a commitment letter, and it's going to have it's going to have a breakdown of what you're qualified for. We can even put the specific address in there. And you need that letter. You absolutely need that letter. And Todd, you know about that, having that letter in there.
Yeah, definitely. So I've gone out to show homes before, and it was, well, one of them was on a Saturday, and they said they were pre-qualified. I asked them if they were pre-qualified. They said, I want to put an offer in on this house. I love it. And said, okay, can you send me your pre-qualification letter? I have to have that to put the offer in. And they said, oh, well, my income's high enough that we don't have to worry about getting pre-qualified. And I said, well, you have to have a pre-qualification letter or they're just going to throw the offer out. And he had been going to this bank for a long time. He said, no worries, they'll get it done. Well, they're not, a bank's open 9 to 5 or 8 to 5. So we have to wait till Monday to be able to try to get pre-qualified. You're not going to do it in a day, get pre-qualified. And I also have clients that go out looking at $400,000 houses, then get pre-qualified for 325 max budget. So you always want to work on your credit, do credit repair. A lot of people say, oh, I'll just pay off my bills real quick and my credit will be okay. Credit repair erases your history, all your different problems on your credit history. And they also give you advice on other ways to boost your credit. And it's only $50 to $80 a month. And I did it in 9 months. It boosted my score 120 points. It was mainly from student loans. And they gave me some other info to boost it. So I definitely believe in it. And let's see, loan, estimate your monthly payments, increase bargaining power.
Yeah, so this will also estimate your monthly pre-qualification, will also help you estimate your monthly payment and total investment. I use an app called Mortgage Coach, and it breaks down the monthly payment. It breaks down how much money you're going to save over the next 5 months. It's gonna break down how much total interest you'll pay, how much mortgage insurance you'll pay. So which is really, really good. And we want to make sure that your monthly payment stays within your goals and within your monthly your monthly budget. And lastly, it'll help me identify which loan product that will fulfill your needs. We don't want to get you on some. We want to get you the best deal possible. So I need to know which loan to work with. So loan pre-qualification tips for simple loan approval. Now, these aren't just for pre-qualification. These are also true for once we get you under contract. Like we actually, once we get you pre-approved, we need to continue with these until after your loan is funded. So you're pre-qualified, you agree on the home, you close. Well, there's a little bit of time after closing, usually not even a day, to where the loan is funded. So we need to make sure everything stays the same. So do call us if you have any questions at all. If you're like, hey, I want to deposit $5 into my account. Is that okay? Call me with that question. Absolutely. Absolutely. I will definitely talk to you. We keep our phones on us all the time. We answer all the time. Continue living at your current residence. So you don't want to end up homeless. So make sure that there is an overlap between homes. A lot of times we can time it just right, but we don't want you staying in a hotel for a week or two because we didn't plan it out right. So continue living in your home. Continue paying your mortgage or rent. We don't want you to get behind on any payments. That will start messing with credit scores, especially mortgages. That can knock you out of qualification extremely quick. Continue to use your credit as normal. Don't overspend on anything. Keep making those monthly payments. Keep working at your current employer. Now, sometimes people move for work, which that's fine. We can explain that with an offer letter, a letter of explanation. We can paint that nice little pretty picture for the underwriter. But it's a lot easier on you, the borrower, when it comes to getting documentation to paint that picture for the underwriter if you just stay at your current job. Just keep things nice and streamlined. Keep the same insurance company. If you already have homeowners insurance and you're happy with them, keep them. It makes it easier. You can call them up and say, hey, here's Blake's number. I need a quote on this home. Get with him. If you don't, that's fine too. My guy Gavin can get you great deals. So more than happy to refer you out to him. So stay current on all existing accounts. Do not fall behind on anything. Again, that will mess with your credit. And last, do expect requests for additional documentation through the process. The closer we get to closing, the more documentation we're going to ask from you. That's just kind of how it goes. So make sure that we can get a hold of you when we need you, if it, email or phone, and be able to get us those documents. Now, don't make any large purchases. That brand new Porsche would look great right outside of that brand new home, but don't buy it before your loan is funded. Make sure after you get the keys and the loan is funded and you go walk through the home, then go buy that Porsche. Don't change bank accounts or make any large cash deposits. So with any large cash deposits, that's $2,000 or more, we need to source those funds. We need to figure out where the money came from. Again, the Patriot Act, we need to know what money is moving around and where it came from. Don't transfer balances. We can work with this. We can definitely get it done. But again, it's just going to be more work on you, the buyer. Don't close any credit card accounts. When you close accounts, believe it or not, your credit score drops a little bit. So we want to keep you above 640, get you the best rates possible. Do not consolidate your debt onto one or two credit cards. Do not do that because again, now we're messing with your DTI and your credit score. And we've got, guidelines and thresholds for those. Do not apply for a new credit or take out a new loan or co-sign on a loan because your credit will get pulled. This will show up on your credit. Your credit score goes down. Now we're out of pre-qualification. And really this last one you should never do, whether you're looking to buy a home or not. Never max out or overcharge on your credit cards. Really hard to get back from that, especially because interest rates on credit cards have skyrocketed recently. So never want to do that.
Yeah, so just recently I've had two people that came to this webinar. One of them she bought a car right before she went shopping for homes. And the other one, she got a house in her contract, went to Las Vegas and maxed out her credit card and ended up not buying the home. So yeah, pay attention to this. It is a big deal. Using your bank.
All right. Sorry, I had a call coming in. Using your bank, mistake number 3. So bank penalties can be expensive. We've all had that. Wells Fargo just got, I don't know if anybody heard, but Wells Fargo just got hit on their mortgage side because of hidden fees and overcharging people. They had to pay $3 billion. So bank penalties are expensive, and those are expensive for them. So most banks will charge an origination or discount points, which that's really common now, the way the market has been. Most lenders are charging origination and discount points, but banks tend to be higher on that. The big banks tend to be higher on that. In large banks, you're just one of thousands of clients. To them, you're just a number. You might have your favorite teller you always go to when you want to deposit your check or cash check, but they're not the one that's going to be servicing your loan and writing your loan. With the big banks, on my mortgage, Wells Fargo is actually the servicer. And I've never talked to the same person twice, not once. So it's really hard to get anything done with them. And large banks typically have stricter guidelines that will not cater to specific situations outside their general box. So a lot of times they don't like to go the extra mile. They say, this is the FHA that we want and we like. This is it. If you're just a little bit outside, sorry, we can't do anything for you. And large banks may not offer down payment assistance programs. Again, a lot of times they don't want to go that extra mile for you and get that money from the state for your down payment.
Yeah, banks don't have to disclose what they make on your loan. You may pay more than you need if you don't shop aggressively. If you're using your bank, I would always, or you're buying a brand new construction home, I'd always give all your loan documents to Blake as well. Compare what the other lender's going to give you and make sure everything's the best way to save money. Even if you already have a lender, I would recommend going and checking with multiple lenders and seeing what they can offer you. Even after you get the home under contract, you can still go talk with more lenders and things like that. Yeah, I send a lot of people to Blake. I do sell a lot of new construction homes. It's free for me to help you and represent you on a new construction home. And often they'll be given all kinds of incentives, and Blake will still be able to beat their incentives. Buying directly from a builder.
Yeah.
Speaking of which.
Mistake number 4. So the truth about buying straight from a builder is closing cost assistance can be bait for a higher interest rate. And which is true. We had a mutual client send me an estimate from a builder, and that's exactly it. I was able to beat their interest rate, and they were giving him an incentive, but it was just going right back to them for the higher interest rate. On top of that, a lot of their closing cost fees were more than mine, and they were charging some things to him that they really didn't need to, that I don't typically charge. So keep in mind, when people are giving you really good deals and offering you $10,000 towards closing, There are like, no one gives that money away for free. My question is, and this came to me earlier today. If you're going to give me $10,000 towards closing, why don't you just take $10,000 off the purchase price and we'll call it even, right? But I'm not in those conversations. That's Todd. That's you. So speaking of Todd, a realtor works for you and a sales agent works for the builder. And keep in mind, like when you've got a team like Todd and I, we are here for you. Our job is to get you the home that you want. Okay. Sales agents and builder lenders, they're trying to fill the builder's homes with whoever comes through that door. So that's their job. We work for you. They work for the builder. And keep in mind that Todd and I, we don't get paid until you are closed on that home and that loan is funded. That's when we get paid. So we're fully invested in your time and get you into that home.
Yeah. So what we're actually saying, it's okay to buy a new construction home basically from a builder. It's free for a realtor to represent you when buying a brand new home. And that's a huge deal. If you go in there and you sign up for a brand new house and stuff, and you don't have your realtor with you the first time, then they'll tell you you can't add a realtor because they don't want a realtor in there reading all the contracts and stuff. I do have a background as a builder, so I can look at the quality of construction and, how familiar are you with the builder that's building? We know all the builders. What's their reputation? What's the quality of their construction, their contracts? How familiar are you with the real estate contract? Do you know what to look for to make sure you're receiving all the benefits you're supposed to receive? Are you aware of any fees or community fees? A real estate agent is the expert in the industry who's going to be there to guide you throughout a real estate transaction. Make sure you register your realtor at the very beginning. If you want to be sure you have someone looking out for your best interests, tell the builder on your very first visit that you're already working with an agent. If you're using an agent, it's not going to change the price at all. It might actually change the price for the better. But you're never going to pay more if you have a realtor. And I just had a guy who's like, so what are you going to charge me to do all this? And I was like, yeah, Blake will look at all your stuff. I'll help you with all the contracts. You don't pay anything. And you're not just dealing with some random salesperson. Skipping a home inspection. Oh yeah, so this, I have a background as a builder. This is all my gear. Do a pre-inspection and I record a video of everything that's wrong with houses, new or old. I have a scope on the right that goes down all the plumbing. It's got a camera on it. I can record anything in the plumbing, like roots, things like that. But I do all this before you put in an offer on the home. I can check the foundation in different areas. The air conditioning system, I have tools to check that. I have a drone to check the roof if I can't get on the roof. I take it really seriously. And I don't know any realtors that basically do a pre-inspection before you even put in an offer for the home. After you get it under contract, I do get a professional inspector in there. Cost of skipping a home inspection. So this house right here, I don't think you would get an inspection. I think you would just get like a bulldozer or something. It's pretty rough. You purchase a house unaware of deal breakers, which is kind of what we were saying. So some builders, a lot of builders, they do their own little inspection at the end. Once you sign everything, you're on your own with your homeowner's insurance. So a lot of times they'll tell you, we have our own inspector. You don't need to get an inspector, but I'm always going to put an inspector in there no matter what. Sometimes you'll buy a house as is, which means they're not going to repair everything. You have to take it as is. And you're saying, okay, well, we're going to take it. Well, you still need to get an inspector in there. So you can, there could be some things that make the house worth like 30% less. On negotiating power, once we take the inspection at the very beginning, you're inside of this period called an option period, and say it's 7 days. So you have 7 days to back out of the contract and get your earnest money back. But in those days, say we find a lot of new problems with the house that we didn't see before, we can either ask them to repair all of those problems, or we can ask them to give us more money back. And we, like I require them to, use a licensed plumber or licensed whatever they have. You risk inheriting non-structural safety issues such as mold, radon, and carbon monoxide. You miss having a future forecast of future repair cost. And I do remodeling and things like that. So if you need new carpet, flooring, anything like that, I can tell you about how much it's going to be, and I can get really high quality workers to put it in at a low price. You're oblivious to illegal no-code additions and remodels. When people turn a garage into a room or they enclose their back porch, you need permits for that. And so they're like, oh, the house has 200 extra square feet on Zillow, but on the actual survey, it has 200 square feet less. And so you're like, where did that square feet come from? You can get fined for having a house that didn't have a permit for this extra square footage and things like that. And a lot of people don't even know they have to get a permit.
Hey, Todd, real quick, what's radon again?
Oh yeah, well, radon's a gas, and it's formed usually when there's a big cracks in the foundation underneath the house that go through. It's formed with the dirt and the cement mixture encapsulated in small spaces, and then it goes up through the walls and through the bottoms of the floors, and it kind of sits on the floors, but it's actually the second leading cause of lung cancer in the United States.
Oh, wow.
After cigarettes, no joke.
Wow.
So people buy a house and they're just, oh, we'll just live in it, even though it has foundation problems. You're risking a lot. And you need to go get a radon test, which is super expensive. So yeah, there's a lot of things that people don't know about. There's a lot of things that people don't realize realtors do, and choosing the wrong realtor. And this is so small. Sorry. Yeah, so you want someone that works in your area of expertise. There's a lot of really good realtors around, and it's not hard to get a list of realtors who have great credentials, but what you need may not be their expertise. The starting point is establishing what type of buyer you are. For example, are you an investor, a home buyer, first-time home buyer, selling an estate? Know what type of service you need. Then you can critique realtors on their skill set. I specialize in first-time home buyers. A realtor with a few years in the industry should have accumulated the experience to remain steely under pressure. Ask questions about the tough times and how they dealt with them, as well as asking how long they've been in the industry and their current role as a realtor. Some realtors are too busy. A realtor with many clients is not necessarily a good thing. It's an individual thing too. Some realtors cope better when they're on the run, very busy. Others provide a better service and take your calls when they're managing their time with less work. The key here is to find the realtor with an optimum volume of clients, so they're happy to communicate with you when you need them. Yeah, me and Blake, I don't know if I told you guys this, but we answer our phones or texts pretty much all the time. We stay up till 11, till midnight, helping clients. Like, we don't care. We're dedicated 7 days a week. anytime. We're here for you. Use a local realtor. Don't waste time with the realtors not working in the area you're buying in. We mentioned earlier the need for experience and knowing the area well is important. So elect your realtor who has a good track record in your area of interest. Verify if they work alone or as a team. It's good to work with the realtor who has a team, but you should make sure it works for you first. It should be understood up front that everyone is going for the same goal. So it is important for a realtor to work with a really good lender, the communication, a really good title person. There's great communication between them. The broker, she's extremely busy, but we still talk on the phone, and there's a lot of flow that goes to it. If you had some random realtor, some random lender, some random title company, bank, it can get pretty messy, the communication part of it. Yeah, you need to know if you and your realtor understand the type of communication you both prefer. Set expectations on how often you need to be updated, what type of communication it should be, and see if they can meet it. Check if they can provide references, sites, past clients, reputation, learn what they have to say. The realtors are the ones who know how to listen and understand your situation. You'll know their mindset by how they ask you questions and what things they tell you. My personal motto is the most successful transactions are the ones that build lifelong relationships. And I'm still friends with just about all of my clients. I have 5 stars on every platform, and I don't have a client that hates me or that's mad at me anywhere. So, question. Okay, so this is a crime rate map. If you're looking for neighborhoods and help with that, this is the airport, the big red one, and that's super, there's tons of crime there, but we can study that. We can study soil maps to see if you have potential foundation problems in the future. I like niche.com. I'll put it in the chat here in a second. I love, reviewing cities and areas with that website. So how do you guys feel now? Excited, confident, or informed? Please ask us more questions. We're getting to the Q&A part. And yeah, be sure to book a one-on-one call. toddporealty.com/book. And I'd love to talk to you guys. We're not going to hassle you. You book a time, we'll call you. I'll call you for however long, 15 minutes, and we'll get you started, get you headed in the right direction. Did you have anything to add, Blake?
Yeah, there's some questions here. I was going to go over real quick. So looks like Jared put in there VA loans. I guess you have a question about VA loans. They're great loans, low interest rates, zero money down. There is an upfront fee. Just all government loans have that upfront fee, but it's really, really a great loan where the veterans are protected very, very well. Again, 0% down and almost no DTI ceiling on there. So, Jared, if you're a veteran, man, book that call. More than happy to talk to you about that. Oh, also in the state of Texas, veterans that are 100% disabled don't pay property taxes. So that's huge. That's pretty big. So yeah, if you want to ask more specific questions about the VA loans, feel free. And I would, love to chat that over with you on that phone call. All right.
Oh, I just wanted to say, I really appreciate you fighting for us. I have a lot of military in my family. I appreciate it. And I was going to say this webinar is being recorded right now, and I'll put it on YouTube if you guys want a copy of it. But I'll send it back to you, Blake.
All right. So if I found a loan program that is doing a zero money down, but you pay closing costs and other fees, would you say that's a great start for a first-time home buyer? It depends on the loan. So right off the bat, it sounds like a USDA loan, which that's typical of a USDA loan. Zero money down. But you do have the closing costs. Well, and the other fees would be like your origination, your escrows, and your title fees. So origination is what you pay to the lender, me, or my company, I should say. That's processing and underwriting. Escrows are your taxes and insurance that we